And you might think, okay, well, in 10 years, we'll have another crash. 10 years after that, we'll have another crash. And there's got to be one that's going to be worse than this. I don't think so because of this reason here. The next crash we have, or the next one, or the next one, if we have a crash where prices actually go down, which didn't happen this time, that's going to be an easier market.
Ricky, thank you for joining me for our Thought Leader Spotlight series. I'm your host over here, Matt Kamp, head of partnerships at DealMachine. And on these, we like to shine a spotlight on industry experts like yourself, hear your inspiring stories, and see how you see the real estate world evolving. So today, really excited to welcome on Ricky Carruth. I know you're somebody, Ricky, that has closed over 1,000 deals as a solo agent. You've listed 100 properties a year for over 8 years in a row. One of the top real estate coaches in the world, and you're an agent, you're an investor, you've got a ton of experience you can talk about. So, Ricky, really appreciate you taking some time out with us, man.
Dude, I'm excited. Thank you for having me, bro.
Yeah, can you tell me more? I mean, I know I was just mentioning I saw an interview about you talking about your first deal, but can you talk about how you got into real estate? Why you got into real estate? Love to hear kind of that origin story.
Well, the way I say it is real estate. I didn't really try to get into real estate. Real estate kind of got into me. Like real estate found me. It was kind of out of necessity because I failed a history class in college. I went to 4 different colleges in 2 years, and I failed a history class, and I was like, I'm just done with college. And real estate was one class to get your license, and then you're off to the races,
Hmm.
and there was a lot of my mom owned a hair salon. She cut a lot of real estate agents' hair when I was growing up. So I saw like their lifestyle and the way they dressed and the cars they drove and the houses they lived in. And it seems like they were um, kind of at the upper echelon. They were kind of at the top of the food chain when it came to lifestyle, right? How they were living and stuff. And it just seemed like a great I didn't really plan on getting into real estate when I got into college. I was just like, I want to study business. And then I just I wasn't, I made all A's and B's in high school. I made one C and I literally slept the whole time. I could just absorb the information with my head down and I was able to pass the tests and stuff. And so it was pretty easy, but that's not how college works. You actually have to work really hard in college. And I really wasn't built in that capacity. And I really was kind of, I felt like I was more of a liability than an asset because my parents were paying so much money for me to go to college and my heart really wasn't into it. And so what I found interesting about real estate is I get paid to learn in real estate, right? I make money as I go. And as I'm learning, I'm getting paid versus college. I have to pay to learn. And of course, it's two different curriculums. It's two different, completely different worlds when it comes to the knowledge and experience that you get, and both have their place. Um, but yeah, real estate just kind of found me out of necessity and through me trying to be a super efficient person, like one class, okay, versus 10 years of college to be a doctor or lawyer. Um, and so I took the easy route, but I wasn't doing it to take the easy route. I was doing it to be the most efficient I can be and get to a career as fast as possible so that I could work really hard. I never tried to veer away from the work. I grew up roofing houses with my dad, and that's where I learned how to work really hard and, be very dependable and consistent and show up every day and work through pain and all that good stuff. And so those are kind of the roots, that kind of got me in the mindset of just grinding. And then, when I had that experience in college and kind of, started to, think, okay, maybe I'll be a real estate agent. One thing just kind of led to another and I got in. So, um, it's kind of like my wife. We were best friends forever first, and then we just kind of became a couple. Same thing here. It's not like I like was like, I'm going to do this, right? I didn't say like I'm going to marry her. It's just something that just kind of happened through the
Naturally.
journey of life. Same thing with real estate. I didn't say I'm going to be a real estate agent. It's just kind of something that kind of transpired. And I like things like that. That's why I try not to force a lot of stuff in my life. I like to work hard and let things happen the way they're going to happen. Whatever's meant to be is what I believe is going to happen. And I work really hard. And I have really creative ideas that I pursue. Um, but there's a lot of things I think about that I could chase, that I could
Mhm.
go after, but I just don't. Like for example, I have a lot of equity in properties, and most
Mhm.
people would say, well, refi out, take the cash, buy more properties. And I'm just like, why? It is like not every business model fits every person,
Mhm.
everybody's different. And I like having a lot of equity. It makes me feel good. Yeah, I could
Mhm.
have double the properties I have now, but I call also have a lot more debt, which would be fine because it'd be good debt, it'd be, cash flowing properties. Um, but it just comes to a point where um you're kind of where you want to be. There you've got to find this place where you're kind of satisfied with where you are at all times, even when you're new trying to get to the $1 million. You've
Mhm.
got to be kind of happy and excited and content with where you are, but yet still hungry to put in the work to grind for more. That gray area where most people are either really happy and content and lazy and they don't do anything, they never accomplish anything, or they're very ambitious and they're always chasing the next thing and they're always unhappy because they're never where they want to be, even though they're really far along. They're always chasing something bigger and bigger and bigger.
Mhm.
There's that happy place, there's that gray area where you can have the best of both worlds, where you can be content with where you are, but still hungry and ambitious and motivated to continue pushing to accomplish more.
Mhm.
And I think that's where you got to live, right? Just to maintain your mental health sometimes. But
Mhm.
yeah, and so with that being said, I'm just happy to be here.
That's great advice, man. Yeah, I love that. And, like you said, having awareness on what success, quote unquote, could look like for you. You don't have to be aiming for 1,000 units, or,
Hmm.
you can try to understand, hey, what is that balance I want to achieve in my own life? I know you've taken, like you mentioned, the agent and investor path, the kind of that
Hmm.
hybrid model. I know we've got quite a few people on here who are interested in investing, potentially being an agent as well. Like, do you have any advice there on how to navigate those waters? Like, do you recommend being kind of a hybrid of both? Like, I'd love to know what you'd recommend to newbies, especially trying to figure this out for themselves.
Yeah, absolutely. And it's like Thatch Win on Instagram. He's a big investor and everything.
We've had him on here, and I've been on Springboard, his group, quite a few times. We do a lot with
Yeah,
them. So yeah.
yeah, yeah, yeah. I've had, we've hung out and stuff, and
Nice.
he's like, just get 5 rental properties and get them paid off, and you're done. You don't have to
Mhm.
have 1,000 units. There's so much truth behind that, and like he only invests in his local area, his local market there in Seattle.
Mhm.
I'm the same way. I only buy things right here that I know, that I grew up passing the property or the house or whatever. Um, I know it like the back of my hand. So yeah, like for me, I can only tell you my story. Um, I just focused on being an agent for so long. My goal was to be the number one agent in my market. My goal was to be the number one, for my brokerage in the state. My goal was to make $1 million as an agent per year. And so I just really laser focused on that for a long time. So I did that for 20 plus years. I invested in the beginning, and that was before the crash. Because of those investments, I actually lost everything because I did it wrong. It was all interest only money I shouldn't have had, and the market crashed. And then when I came back, I didn't go crazy investing in stuff, but I started kind of slowly picking up properties. I'd pick up one a year, literally one property a year for a couple of years. And then I think I went maybe a year or two where I didn't buy anything. I was just so focused on because during that time I was getting close to making a meal. So I was really focused on just hitting that goal. Because I was like, okay, if I hit that goal, then I could, then I've got options. I've got money that I can, do whatever I want to do. So I was like, let me just focus on this. And then I ramped it back up, where I bought, was buying like one property a month there for a little while. And I've
Mhm.
bought several properties every year. And I'm building an apartment complex now. Um, and any little deal we see, and so I flip properties. The market's been tough. So we've probably flipped like five, six, seven a year this year, last year, year before. It's been really tough with the flips. Because we buy them on the courthouse steps. That's the only place we buy them at. We don't like, you know, drive for dollars or cold call property owners and stuff. We just look at what's coming up on the foreclosure list and what we can go to an auction and buy something really cheap for. And we just kind of focus on that and we pay cash and for the flips. And then I'll buy rental properties as something comes up that's interesting that fits my portfolio. But I'm really kind of I would have bought a lot more this year, but I really focused on the development and just trying to, all my
Hmm.
resources allocated towards that. But you know, um it's amazing because like things I bought back in 2011, 12, I mean, I've made so much money. Like the cash flow is ridiculous from the rent
I'm sure.
increases over the last, 12 years to the equity jump. Um, it's been just amazing because you literally don't do anything for that money. It's just free money. And when you get a taste of that real true passive free money, that was like, after the election, the stock market went crazy, right? For like a week.
Hmm.
Um, like my account just massively jumped
Hmm.
because I have a lot of stocks. Um, you need to be diversified, right? You should be like some people just want to do real estate, just want to do stocks. You really need to do both. I mean, that's my real advice because and I'll tell you why. It's because with stocks, you literally do nothing. Like with real estate, you've got to like find renters, and even if a management
Hmm.
company's doing it, right? There's still things. With stocks, like if you have a money manager that's amazing, they just crush it for you, and you just throw money, and you just, you do 10, 20, 30% a year. Um, and the thing is like a company, like I'm up like 200% on some stocks that, I bought this year. You know what I'm saying? You can't
Hmm.
do that with real estate. You can't get a 200% return in 6 months in real estate. You can buying companies, And so, no, you're not going to put all your eggs in that basket. But again, spread it out. Diversification, I think, is really smart. And a lot of people, they don't have a lot of money. That's okay not to be diversified when you don't have a lot of money, but when you have a lot of money, you don't want it all to be, you don't want 10 million bucks just in real estate. You want, to split that up and kind of spread it around so that you're kind of winning in all on all corners.
Hmm.
So, yeah.
Well, yeah, we'll talk often about the difference between active and passive income in that way as well. Whereas the active income in terms of generating listings or wholesaling or flipping or anything like that on the real estate side, and then you have that long-term perspective on your end of, hey, I've been in this a long time. Houses I bought in 2011 are doing very well now. Like that's awesome that you can bring that perspective, especially to the newer people and the fact that real estate's gone up literally every single year minus like 3 years since World War II. Like it's a pretty good track record as well. So you've got a lot you can if you can think
It's a
longer
very
term.
safe bet.
Yeah,
Real
yeah.
estate is one of the safest places to put money. And even when you talk about these big repairs and stuff, I had one of my agents call me and say, "Hey, I bought this house for what do you buy it for?" He bought it for like 150. It's worth like 300 or something. And he just found out there's a $50,000 like foundational problem.
Hmm.
And he's like, "What should I do?" I was like, "Well, fix it." Because literally, if you try to sell the property, they're going to want like 60 or 70 off for that fifty thousand
Hmm.
dollar thing. So the problem's there. So you can't do anything about it now. So that 50,000 you invest, you actually make, like 10, 20% more than that, depending on how much you think a buyer would talk you down from what you could get for it if that repair wasn't, there, right? It's like you literally make a return immediately as soon as you do that repair. And now you've got this fixed up property that you can either sell at that point, continue
You have
renting,
options. Hmm.
right? So even the repairs and stuff, it's just like that's just money. That's just like a safe place to put your money. And that's what you want. You want nice, safe places to put your money.
Hmm. I love on social media, you'll talk about when it comes to real estate, just the opportunity people are going to have in 2025. Like, I know this will probably go live right around kind of the end of the year, but going into the new year, why are you so excited about, that opportunity? Like, I'd love to know what you're thinking about,
Well,
where the
this is
market's
like
headed and all that.
2008 right now. I
Yeah.
mean, really, sales are down this year, 2024, down to 2000, 1995 levels
Hmm.
from what everybody's saying.
Worse than '08. Yeah. Hmm.
Yeah, yeah, worse than '08 when it comes to transactions. But what's
Hmm.
interesting is, in my opinion, this is the worst market, literally the worst market we'll ever see. And you might think, okay, well, in 10 years we'll have another crash. 10 years after that we'll have another crash. And there's got to be one that's going to be worse than this. I don't think so because of this reason here. The next crash we have, or the next one, or the next one, if we have a crash where prices actually go down, which didn't happen this time, that's going to be an easier market. People say, well, it could be worse, prices could be down, but that would actually be easier for agents and investors because now you could actually buy things and agents could actually sell things. In 2008, prices were down 50% in a lot of cases. And I was selling during that time, and it was one of the easiest times ever to sell real estate. It's like, hey, here's this beautiful home. It's 50% off, 50, right? Or 40 or whatever. You want it? It was an easy yes for people to
Hmm.
say. And so if prices were to, come down 20, 30% or whatever, it would be amazing, right? That'd be an incredible market. Um, there's people that predict that. There's people that say that it's got to come down 20, 30% to kind of balance out the unaffordability. But it's just like they don't really give us a reason, like they don't tell us how, like, or what's going to happen in the market that causes this to happen. But like I don't care what it does. If it stays high, great. I mean, not great for people that can't afford homes, but I can't control the market, right? And so I'm talking about it from my business perspective. It doesn't matter to me. I like, do I want prices to come down so that people can afford houses? Yes, right? But I can't control it. So if prices don't come down, it doesn't matter to me and my business, right? I own a bunch of homes. So it's at all-time highs. Awesome. People are still buying homes. I can still, if prices are still really high, I can still buy them cheaper and resell them. Rents are still really high, etc. If prices come down, then it's just going to be a free for like it's going to be like, who wants a house? Like you get a house, you get a house. Everybody's going to be buying a house. So it doesn't matter to me either way. And this is the position everybody needs to be in. And even if you don't own a lot of houses like I do, and you're like, well, I don't want prices to stay high. Why? Right? So, I don't want prices to go down. Why? So if you really diagnose and identify why someone would want home prices to go down or stay the same or go up or whatever, and you look at it from the point of view of a real estate agent or slash investor, there's always going to be two sides of it. There's always going to be a side where you can say, okay, that would be bad if that happened. But in that same scenario, you can say, but this is where all the opportunities are within that scenario. There's
Hmm.
always going to be massive opportunities. It's like agents right now. In my opinion, agents right now should be really focused on new construction because the builders are still doing rate buy downs, they're paying closing costs, they're brand new homes. And so if you call subdivisions of older homes and say, hey, do you want a newer home? They got rate buy downs, they got closing costs, they're giving you free curtains and washer machines, then and you can help those people get into a new home, great. If they don't want to, that's okay too. You can still create a relationship with that person for the day that the market rebounds. And now you're building your now business, your short term and your long term business at the same time. And you're taking advantage of that opportunity of builders giving rate buy downs and really good deals on these brand new construction homes and stuff. I
Hmm.
mean, you can always and like you're just like building yourself up because we're going to get back to a normal year. Next year is going to be, I think we're going to get back to like a 4.4 million existing home sales year, right? Probably 5 million home sales total, new and existing. A normal market is 5 million existing home sales. So we're still going to be about 10% or more away from a normal year.
Mhm.
So we just have
And
so much the road there's we've got so much room to grow over the next couple of years, and this is
mhm.
the bottom. So
To give context, what it like this year, for example, what's the total projected amount going to be?
3.9-ish.
Yeah, so significantly down. Yeah.
Yeah, yeah, 3 point
Hmm.
and to put it into context, 2008 was 4.1.
Hmm.
4.1 in 2008. And remember, in 2008, there were 4 million listings. It wasn't like there was a shortage of listings like there are now. Completely different ball game back then. Right now,
Hmm.
we're looking at lower transactions with, you know, a lot lower, like 25% of the listings. And we're inching back to pre-pandemic levels of inventory, which is a good thing because as the market's down, we're building inventory, and then when the market kind of starts to rebound, we'll have inventory. That's a
Hmm.
good thing. But there's 200 major markets in the US. Last year at this time, 17 of those 200 markets were back to above pre-pandemic levels in terms of inventory. And now this year we're at 54 of the 200. So we're inching up, right? We're still below, right? We're 20% above as a nation, and we're still below pre-pandemic levels in terms of inventory, which is crazy to think about because we're already really low. But we are inching back, and there are more and more markets every year that are getting back to above pre-pandemic inventory levels. And
Hmm.
look, the longer the market stays down, the better it's going to be because the longer it's going to give time for inventory to grow, for more pent-up demand to grow. It's not, where we are right now is not a bad place. It's an incredible place, and it's going to be a springboard for anybody that realizes it.
Hmm. I do love your perspective where you're saying, hey, if the market's going to go down, hey, you know what? If you buy right now, which is what we teach, hey, go direct to seller, find a good deal that you can actually, really, if you're on the investor front, find a good deal you can actually like add value to and everything. So if you buy right, even if the market goes down, you've got some cushion there, and then you can buy at a discount when it's low. If you buy now and it goes up, then hey, you know what? You just built a ton of equity, and it's great for people who own the property. So it's something now if you can really invest in that skill of becoming great within the real estate space and get good at it now, when things do shift, like you're going to be set up for huge success in the future and when things start to get really going again. So
I
um
like to be very equity heavy.
mhm,
So when I buy a rental property I'm going to get a loan on, I like to put more than 20% down. So I don't have to pay PMI, and I've got some equity in the property. I've got a
mhm,
nice mortgage payment that the rent could cover. And I like to even put more, like 20, 30, 40% down. I mean, I bought two new constructions and I put 100 grand down a piece on 350. So I borrowed 250 against a 350. Well, it was only even 350. It was like 335 or something like that, 345. Um, and and so like when you look at, my advice for like the younger investors and stuff, like there's so many different models and stuff when it comes to this, but
mhm,
I would put myself in a position where you've got a lot of cushion on the rent versus your mortgage payment. Um, and if you have to put more down to create that cushion, that's fine. That's equity in the bank, you're just taking it
mhm,
out of one pocket and putting it in the other. And that way, if something happens, like you need to look at it like, okay, if I'm going to keep this property for 10 years, 15 years, 20 years, like, okay, this rent takes care of this mortgage plus 400, $500. Like I
and
ain't got to
cash
work.
flow.
I don't have to worry about it. If the market
Mhm,
crash, if prices go down, doesn't matter to me because I'm not selling at that time. I want to be buying more properties because the market will
mhm,
rebound at that point.
Yeah, having that
Come
long-term
back.
perspective, yeah, it's like you said, it's kind of time in the market, not timing the market, right? You hear that cliche all the time. Yeah, I love your perspective on that. I know you mentioned now you're looking at, kind of apartments and, you've leveled up, but especially when you first started, you talked about like going direct to seller with the, handwritten notes. I know you have great content on cold calling, on door knocking, stuff like that. I mean, that's really kind of the space that we play in on the DealMachine front. We've got a lot of customers who are trying to go direct to seller and, use our tool to help them go do that. Do you have any advice for them in terms of how to build that relationship with a seller, how to, again, that could be a whole nother big conversation, but it's something that I think you put out great stuff on that. So.
I think the key is to build a rapport in a way that you're not trying to get them to do something, because when you're trying to convince them to do something, um, convincing is more so trying to get them to do something for your reasons, versus helping them do whatever it is they're trying to do, right? I think the main point is to get them to open up to you about what it is that they want to do. Like, what are their plans? And I think most people that make calls are just too pushy, salesy. Uh, they're just trying to get the person to do this, do that. And
Mhm.
I think it's the wrong strategy in my opinion, because I'm trying to build a relationship with this person because they already know when they want to buy or sell. All right. I'm not going to magically talk them into buying or selling something,
Right.
right? They've already kind of made that decision. My job's not to get them to make the decision. My job's to get them to tell me what the decision is that they've made so that I can help them do it. And whatever it is, it doesn't matter. If they want to buy or sell now, awesome. If they buy or sell later, awesome. If they, don't ever want to talk to me again, awesome. Like, it doesn't really matter. I'm just trying to build a list of people, an inventory of prospects, a database full of, you know, local property owners that trust me, right? That know I'm looking out for their best interest, right? So, I mean, I think that's kind of the bottom line.
Yep. Yep. That's great advice. I mean, just coming into it, we always mention like come into it trying to understand, like you said, ask open-ended questions, really be a listener and really try to figure out how to help that person, how to help them solve a problem, how to make their life easier. Like you said, you're not convincing somebody to move, it's helping them, understand like why they're doing that and make it an easier transaction for them. So, um, awesome, man. I don't want to run too far over on you, Ricky. I know, again, would love to have you on again, and again in the future, speaking to our customers and things, and teaching them, variety of different things here. But what's the best way to get in contact with you? I know you've got the zero to diamond.com site as well. Like, can you talk about what you've got going on there?
Yeah, Instagram's the best place to get me, right? DMing me.
Cool,
I answer all the DMs. So if there's any
awesome.
questions or anything I can do to help anyone there, put content out there as well. YouTube, I do, I give away everything for free. So everything that I
Mhm.
know, I give it out for free on YouTube, and I do Zoom calls and stuff like that. But yeah, zero to diamond.com. That's kind of the coaching program as well. And that's where I have a CRM, weekly email templates. I do a once a month Q&A. There's full course, there's everything there.
Love it. Awesome. So we'll link to that below as well. We've got a few other free resources down there. But Ricky, really enjoyed the conversation. Thanks again for coming on, man.
Thank you, bro.
Yeah. To everyone watching, is Matt Camp over here with Deal Machine, and happy deal finding.